Hey everybody, welcome to the LikeFolio weekly call. I'm Andy Swan, joined by Landon Swan, founders of LikeFolio. And this week we wanted to go through a watch list for you for the September slump that may be incoming, probably is incoming historically, but we want you to be prepared for it in terms of a watch list. So what is the September slump, Landon? It's, when you look at the returns of the S&P 500 since 1928, it really does stand out, as the only month with a significant uh, negative return over the last, 97 years, which is really interesting. You wouldn't think that a single month would have something like that, but um, it's definitely a real statistic.
It's pretty wild. And, this is one of those things that as more and more people are aware of this, it becomes a bit of a self-fulfilling prophecy, but it should move backwards in time, right? Like if you think that there's selling coming in September, you'd probably sell in August.
Yeah.
And if you think the bottom is, if the best time to buy is in October, you probably start buying in September. Like it should, in theory, move backwards. But unless there's some other reason like profit taking or some seasonality thing that I'm not thinking of. But if it's just a, psychological phenomenon, it should move backwards slowly.
Yeah, I think that there's some, there's some vacation stuff in there and different, reasons why it may be happening, but we want to be prepared for it either way. And, this is, the last 15 years of the S&P 500, you can see in the TradeSmith seasonality tool, which probably most of you have access to, but if you don't, there's a link in the email. Really cool tool that they have, but you can see the September slump is very real, and we want to be prepared for it. Here's the average, and you can kind of see where we are, and there's at least reason to think that over the next 30, 45 days, we could see some selling pressure in the market. And so what does that do, Landon, is it creates accumulation opportunities, any pullback in the market, and we're thinking seasonality wise, but any pullback in the market that throws the baby out with the bathwater is an opportunity. And you can see last year we put out a September slump report. We had DocuSign, MGNI, and Aurora in there, and all of them gained very significantly. So we wanted to bring this one back to you in 2025 because our 2024 September slump was really kind of unbelievable in terms of performance.
I mean, that's nuts. 27% is the loser of the three.
Yeah.
Right. I mean, that's incredible. Absolutely. Yeah. And, obviously these are going to be stocks that generally speaking have a higher beta. So they're going to move more than the market anyway. But these numbers are far greater than just the beta.
Yeah.
Right. So these are winners that got, like you said, thrown out with the bathwater. And it just presents a great opportunity. So what do we have this year?
Let's look at our 2025 list of opportunities. So these are going to be stocks that, whether it's September, August, whatever, if we get a pullback in the overall market and these stocks move even bigger than the market to the downside, we're going to be all over it. And first one is Advanced Micro Devices, AMD. I really think that NVIDIA has carried the entire market. It's the S&P 1 at this point, and but AMD is putting out extraordinarily good product, very comparable to NVIDIA. NVIDIA is the best, but AMD is close enough second that they can win a ton of deals based on price and based on overflow demand for what NVIDIA can't fill. And so you can see, Microsoft, Meta, Google, Amazon, they're going to spend $400 billion on AI in 2025. And we're seeing that the web visits to AMD are up 27% year over year, while NVIDIA and Intel are down. That tells us that there's potential market share shift happening.
Yeah, and even like I love that last bullet point. They don't have to have the best chip to make a lot of money. A lot of applications need X amount of calculation power, and it doesn't have to be the most calculations per
Right.
chip. So if your chips maybe cost less and they're less dollars per output, then it makes sense to move from NVIDIA to AMD. So there's opportunity here for them, even if they don't have the very best chips. And I think that as people start to realize that, they're going to start looking at AMD stock
Yeah.
differently.
Yeah. It's AI output per dollar is a phenomenal metric to use. And that's, there was a gold rush initially. It was like, just give me the best chip. I don't care. Well, I'm buying NVIDIA. Now things have matured a little bit, and we expect the market to move more to an ROI mindset, which definitely benefits AMD. The second stock that we're putting on this watch list of we're going to buy it on dips is Hims and Hers Health, ticker symbol HIMS. You know, they've had they had a bump in the road when one of their partners pulled their GLP-1 drug from the Hims and Hers portfolio. And now the stock is already all the way back because what the market realizes is that distribution matters more than the specific product that you're selling.
Right.
And that whoever controls the distribution wins. And Hims and Hers controls the distribution of direct to consumer health in the categories that matter, whether it's weight loss, hair restoration, the Viagra type of stuff, whatever it is. Hims and Hers has a stranglehold on this market, and it's got every tailwind in its favor.
Yeah, I mean, they're becoming like, the one-stop shop for personalized healthcare, and yeah, it doesn't really matter which brands they carry. If they're mostly effective, compared to their competition, you just go with the one that's right there. Because people don't, they're not that brand specific. They just want the cure to their ailment, and Hims and Hers is offering that. So it's a great opportunity, I think, for this one. Absolutely.
Yeah, any pullback, Hims we're going to be on, and you got it from us first when that pullback happened after earnings, or that pullback happened after their partner pulled the drug. We were on it, and the stock is back, somewhat close to all-time highs. And I think we probably make significant all-time highs. We could see $100 a share on that one in 2026. And then the other one, Landon, that is down 24% year to date is Tesla. And a lot of this is, it's a little bit of a mess at Tesla, to be honest. I mean, Elon has gotten himself extremely distracted, it feels like, with the political stuff. He's kind of lost his footing, it feels like, but he's coming back in. And more importantly, we have seen at LikeFolio Tesla be a phenomenal opportunity on dips like this. It's kind of like Tesla likes to go sideways or down until it doesn't. And then boom, it makes the huge leap up to the next price that is significantly higher. That's what we expect to happen again.
Absolutely. And this is one that, you guys know that we're very bullish on Tesla long term. It's not just, it's the cars, it's the technology, the self-driving, it's the robots. I mean, they've got a lot of stuff cooking, and I think they're going to change the world. I mean, I really see a world in the future where almost no one drives and most people have a robot in their home, and Tesla is behind all of that. And it's just incredible. If you look at the execution, the things that they've done that everyone said they couldn't do, and now they're doing it. Just there's a long list of those accomplishments, and then there's a long list of things that they won't be able to do in the future, according to the naysayers. But if the track record holds true, buy on dips is going to work really well, especially if they do dip with the rest of the market in September.
Yeah, I'm going to tell you. So we started getting very bullish on Tesla. I think it was 2018 or 2019. The stock was at $19 a share, split adjusted. Now it's in the 300s. It's been higher. The trick to investing in Tesla is to not get caught up in timelines. Because what Elon does is he likes to set a vision really high and challenge his team, challenge his investors and everybody to think about that vision happening soon. And inevitably, it takes longer to get there than what he sets out because he's setting extraordinarily ambitious goals. But if you just remove the timing piece from it and look at the vision of where the company is going, I don't know that there's a company in the world with a bigger idea and a bigger total addressable market than Tesla that wants to change the world as much. So it continues to be a binary bet. It was a binary bet at $19. Either they fail or they succeed spectacularly at 19. Now it's in the 300s, 319. It's the same thing. It's still a binary bet on an enormous vision. And so you have to just take yourself out of it and say, I'm not going to hold Tesla. I'm not going to judge this stock based on whether they have robotaxis in 2026 across the entire world.
Right.
I'm holding this stock because I think they're going to have robotaxis across the entire world eventually.
Right. And that's so opposite of how most CEOs approach things, right?
Yeah.
If as a CEO of a publicly traded company, you got to hit your timelines. You got to meet your promises that you make.
Yeah.
But he doesn't play by those rules. He's just like, no, if we push really, really hard and set these crazy timelines, we'll get there faster.
Yes.
Maybe we'll quote miss, but we'll still get there faster. So it's just different way of thinking. That's how he operates. It's got a good track record, but you got to adjust as an investor. Absolutely.
Yeah. So the social heat score on these three, very, very strong. AMD the highest, and HIMS looks good. Tesla looks good. We love all these on dips, and with the seasonality, we may get a dip. It's not a lock, but if we do, we're prepared with a watch list of stocks that we're going to pick up. And honestly, I think all three of those, if we do get a market pullback, I think all three of them, because of the beta of them, will move down further than the market and give us a phenomenal opportunity. And so we want to be prepared for that. We want to keep some dry powder, and we want to know what we're going to buy and why we're going to buy it long term, and have that conviction so that when the time comes, we're not scared. We're excited to press the buy button. That's where we want to be, and that's what LikeFolio data does for us.
Awesome, guys. Thank you so much for joining us. If you ever have any questions, you can always email us, Andy@LikeFolio.com or Landon@LikeFolio.com. Love to hear from you. Until then, we'll see you next time.
Thank you.